Imagine this. You're a trader, you've been on a winning streak. The market suddenly turns against you and you lose a significant amount. In frustration, you decide to double down, hoping to recover the loss. The result? A bigger loss. You've just fallen into what we call the emotional trader's trap. It's a common struggle where emotions like fear, greed, or even pride start to dictate your trading decisions, often leading to inconsistent profits or even financial ruin. But it's not just your finances that take a hit. The stress and anxiety that come with emotional trading can also affect your well-being and strain your relationships. It's a vicious cycle. You trade to make money, but your emotions get in the way, causing you to lose money and create stress. This is the emotional trader's trap, and it's a dangerous place to be. Now let's delve into the psychology behind trading. A famous trader and author, Mark Douglas, wrote a book called Trading in the Zone. This book is a guide to mastering the mental game of trading. It introduces 5 fundamental truths such as anything can happen and every moment in the market is unique. These truths remind us to embrace the inherent uncertainty and randomness of the market. Douglas emphasizes the importance of a probabilistic mindset, which means recognizing that each trade is just one of a series of trades and success lies in the law of large numbers. This mindset helps traders make decisions based on probabilities rather than emotions. In addition to Douglas's insights, research from behavioral finance and interviews with successful traders reveal similar themes. They all stress the importance of discipline, patience, and emotional control in trading. Mastering the mental game of trading is the key to consistent profits. Let's expose the solutions for emotional trading. We embark on this journey with the 5 fundamental truths about trading. First, anything can happen. You must accept the inherent uncertainty and randomness in the market. Second, you don't need to know what's going to happen next to make money. Success lies in the consistency of your approach, not predicting individual outcomes. Third, there's a random correlation between your trades and their outcomes, which means that winning doesn't validate your strategy and losing doesn't invalidate it. Fourth, an edge is nothing more than an indication of a higher probability. Finally, every moment in the market is unique. Past performance does not guarantee future results. By accepting these truths, you can neutralize emotional biases and make sound trading decisions. Next, we have the 7 principles of consistency. These principles are discipline, courage, patience, objectivity, realism, flexibility, and rationality. Discipline is sticking to your trading plan. Courage is taking a trade when the opportunity arises. Patience is waiting for the right trade. Objectivity is seeing the markets as they are, not as you want them to be. Realism is understanding that losses are part of the game. Flexibility is adapting to changing market conditions. And rationality is making decisions based on logic, not emotions. These principles guide your behavior and actions in the market. Now let's talk about self-sabotage. It's the elephant in the room, the silent killer of many trading accounts. Common self-sabotaging beliefs include the need to be right, the fear of missing out, and the desire for quick profits. These beliefs can cloud your judgment and lead to poor trading decisions. But fear not, you can conquer self-sabotage. Start by identifying these beliefs, challenge them, and reframe them. Cognitive behavioral therapy techniques, journaling, and mindfulness are great tools for this process. The journey to becoming a consistent trader begins with understanding and accepting these truths and principles. Now that we've laid the groundwork, it's time to put theory into practice. Start by setting specific, measurable, achievable, relevant, and time-bound or SMART goals that align with the principles of trading in the zone. Keep your motivation high by celebrating small victories and learning from setbacks. To make things easier, we've prepared a downloadable guide for you. This guide will serve as a blueprint to help you navigate the world of trading with a clear, level-headed mindset. Remember, consistency is key in trading. Before we wrap up, let's hear from those who have walked this path before us. Consider Paul Tudor Jones, who famously stated, "The secret to being successful from a trading perspective is to have an indefatigable and an undying and unquenchable thirst for information and knowledge." He overcame emotional trading by embracing the unpredictability of markets and focusing on consistent learning. Let's take inspiration from these trading greats and strive to master our own trading psychology. As the famous trader Jesse Livermore once said, "The game of speculation is the most uniformly fascinating game in the world. But it's not a game for the stupid, the mentally lazy, the man of inferior emotional balance, or the get-rich-quick adventurer. They will die poor."